Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Monday stock buys for June 10th, 2019, second week now of June. I'm excited to go ahead and get into it. We're going to quickly take a look at stock futures, go over our M1 Finance week change, what stocks paid out last week, and what we're going to be buying up this week. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, real estate, personal finance. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments yourself, you have a question you would like to ask or have answered, or want to let me know what stocks you are buying either today or planning on buying here in the future, drop it into that comment section. I do read and reply to all your comments. And let's go ahead and get into the video. So stock futures right now, I'm looking at this. It's currently 12 a.m. in the morning. It's Monday morning exactly on the dot, and I see stock futures are up over a quarter of a percent there, which is very nice. So it looks like we're going to continue our run up into the week here. I'm not sure how much further we're going to go before we hit some volatility and just take a breather, relax. But I saw a lot of investors just last week alone recover all of May's losses. I was down some 4% in May. I recovered all of my losses for May in a single 4-day period. So it was an amazing thing here. Now we're going to jump over to M1 Finance. We can see here overall the return of this portfolio up nicely. Gains are back positive. If you watch my 1 month recap, if you haven't watched it, first go back, check it out. But we were down in market gains by, I'm not sure, about 70 bucks or so, just in a 4-5 day period. We went from being negative to being positive, and our 1 week change here is up 4.66%. In a month period, we're now positive from where we were during the end of May. Of course, I've been adding equity just every week, but market gain wise, we're actually positive from where we started May to where we are currently at now in this period. So in a 1 week period, we gained all of our losses back, plus our returns that we had lost in May, recovered that as well. You can see here that the portfolio is getting very close to that $15,000 cap or mark. So here on Monday, I'm going to be adding $115.38. Multiply that by 52 weeks. So that's going to give me my maximum amount for my Roth IRA of $6,000. So I'm getting very close to that point. But we should be hitting $15,000 point here within the next week or so, as long as the markets stay where they're currently at or do continue to trend higher. Now, as far as activity, we did have a few companies pay out dividends last week. We had Walmart pay out $3.43, but I do have some other cash here sitting in hand. It does not currently display on the website what other companies have paid out dividends. So that is pretty much the activity there for the week. We've had a very nice run up in the week period. We can see here as far as market gains, Stanley Black & Decker up 8.78, Apple up 8.62, just a lot of positivity out there. I only had one position in this portfolio turn up red, and that was Digital Realty Trust. This one actually went down slightly, down 1.46%, but overall fairly good there. I'm going to go ahead and switch it back to the all. And we can see here that we still do have a few positions down in the negative. So as I scroll down here, I do have about about 11, 13 positions down in the negative. Now, when I'm going to decide what stocks to buy, I generally pick from the ones that are already in the negative. So here, for example, I have a few positions that are down by more than 10%. CenturyLink is sort of a toss-away one. I added that in there because our business, or my business that I work for, we're moving towards possibly using CenturyLink as a level 3 provider versus a level 2 provider. So this is why it's in my portfolio. I'd like to buy it, possibly maybe below 10, but it's one of those specs where I'm not buying it for the dividend. I would like to see them move from that $10 point back into that $15, $16 point. They've had a bit of a rough patch, but overall, moving forward, Level 3 and CenturyLink are doing well, and I think in the upcoming earnings, they'll continue to move higher. So it's just a sort of a little speck in there. Cardinal Health is down 13.55. AbbVie is down 13.74. Altria, Triple M, and Caterpillar, or 3M, and Caterpillar. So it's a lot of healthcare, industrials, and Altria has been getting slammed because they've been new states increasing their smoking age from 18 to 21. So these ones have a reason to be sort of negative out there. Tariffs have been hurting the industrials, and healthcare has got slammed pretty much year to date. Healthcare is one of the worst performing sectors in 2019, and I have been enjoying buying up Cardinal Health, buying up AbbVie. I've been adding CVS Health Corporation here recently, and Chevron. I've been kind of adding oil as well. You can see here that within the week, Chevron and Health Corporation popped up positive in my portfolio, which is unfortunate. So I'm going to hold off on investing towards those, but I do have a few other positions here down towards the bottom that I would really like to kind of average up my position on, or lower my unit costs, increase my yield on costs, and increase my forward dividends from these specific companies. So Cardinal Health there, very low equity of the negative positions here, down at 373. Then I have AbbVie, Altria in that $500 range, about 570, 580, and then I have a few 3M and Caterpillar in that $450 range. So with all of that said, we're going to go ahead and jump over to my spreadsheet here. I am going to go ahead and zoom in just a tad for you guys on the mobile devices. And what we're going to be doing is focusing on positions that are negative. So I'm going to go ahead and sort this by my negative positions and go ahead and scroll here down towards the bottom. Now I'm going to be focusing on positions that are down by 10% or more. So that doesn't leave too many. I have 6 positions that are down in 10% or more, and 13 positions total that are down just in the negative period of my 33 positions. So of my 33 stocks, I do only have a few that are down pretty hard. And these that are down hard, look at these yield on cost now. Caterpillar is offering a 3.31, whereas I bought it at a 2.75. 3M is offering a 3.46. That's nearly 3.5. That's a very high starting yield for 3M, whereas I bought it at that 3% range. We have AbbVie offering a 5.53 instead of my 4.75. Altria offering a 6.23 versus my range of 5.4. We have Cardinal Health offering a 4.38 instead of my initial buy-in at 3.88. So we have a lot of upside in yield on cost you sort of acquire from adding positions to these stocks. So a lot of you guys out there have been appreciating watching these videos because you see another investor out there actually buying their dip. I've already done the research on the companies that I've added to my portfolio. I've made the mental note, the mindset of buying into these positions at where I believe they were at fair value. And if I see them go down in price, in my mind, that's completely fine. I already made the specific buy price where I purchased them. That was my value point. Anything below that value point is considered a deal in my eyes. And as these stocks falling anywhere from 0 to 19% here in this case, that's just a better buying opportunity for me to get a much better value for my dollar that I'm invested in the specific company. I'm going to be lowering my unit costs. I'm going to be increasing my yield on costs and increasing my overall dollar power. That my dividends are going to be increasing by more because my dollar is going stronger against the company. So, I've seen a lot of comments mentioning that they appreciate these videos because it does show that another investor is out there buying their own dip, and kind of go through my process of why I pick my specific stocks that are currently going ex-dividend, or my whole process here. So what I'm going to be doing is focusing on companies that are coming up on ex-dividend either here in July, which is in the upcoming month, or that are going ex-dividend in June, because we're in about our second week here of June. So currently I have Caterpillar, 3M, Altria, we have Cardinal Health as well. I believe Altria is actually going ex-dividend here on Wednesday. We will check that out. We have AT&T. AT&T is not one I want to be adding to currently. We can see the current price is $32.49. I would really like to average down on AT&T below 30, which I believe it should move down there. If we have a little bit more volatility, that may kick AT&T back into that $30 range, hopefully, but we shall see. And that is pretty much it. Just these positions. So I'm opening up Cardinal Health, Altria, AbbVie, 3M, and Caterpillar. See if I missed one here. My tab Caterpillar, Altria, AbbVie, 3M, and 3M I did not bring up, and that is because 3M is not going ex-dividend until August, but that's fine. I'm going to go ahead and bring this one up, and we'll take a look at this one. So Caterpillar here. This one, let's take a look at when it goes ex-dividend. It goes ex-dividend on July 19th, so I'm going to go ahead and move it away. It's a ways out, so I'm going to start looking at other positions that are possibly coming up on ex-dividend sooner where I can take advantage of that dividend. So this one here is not going to be going ex-dividend until July 2nd, in July. So that's another quite a whiles out. Now we have Altria. Altria, I believe, goes ex-dividend here on Wednesday. So here on June 13th, Altria is going to be going ex-dividend. That's actually Thursday. So we have to buy Altria. If you any position that's going ex-dividend on a specific date, you need to be buying prior to the ex-dividend date. That way you hold the shares, and on the starting date, the ex-dividend or the dividend gets removed from the price, and it becomes a stock trading without that dividend payout, and that's why it's called the ex-dividend there. But it does go ex-dividend there on Thursday, so I'm going to leave Altria up as a possible one to continue averaging into. Cardinal Health here, I believe this one comes up ex-dividend here very shortly. That's on June 23rd, so that's later this month. I have a little bit of time to average down into this one as well. And Cardinal Health isn't down too bad. It's down 12.2%. It did have a bit of a bump up this week, so if we look at the 1 month here for Cardinal Health, should be here in the C's. Cardinal Health is up 4.18% this week. So if I don't take advantage of these dips, I may miss out buying it at a 12% discount to where I initially purchased the company. So I'm going to leave that one in there as well as possibly add it to my portfolio. And 3M is my last one here, but this one again doesn't go ex-dividend until later on. It just went ex-dividend back on May 23rd. I was buying it in May prior, but here I feel 3M bottomed out at $160. We can see it has had some recovery here for the week. 3M should see here. It should be, let's see. Oh, it's at the top. So 3M is up 4.3% this week off those lows of about 459. Oh wait, what? 159, 160. So 159, 160 is where this one sort of hit their lows. Let's go ahead and go to the 5-day. We should see down here, there's that range where 3M was in that 159, 160. That was their support. They hit this $159 point a few times, and then we had that massive rally last week. And you can see here that it tried to trend back lower and then just continue to go higher. So I believe 3M could be at a bottoming out point, and if you bought it in that $160 range, close to it, I believe you got a really good deal. 3M may be on its way rebounding back higher, but we shall see in the upcoming months. But it still is a good buying opportunity in my portfolio, being that it is down several percentages there. So what I'm going to do here is I'm going to go ahead and pick all 5 of them. That'll be a bit of an excitement. It's been a while since I bought 5 stocks in my portfolio, but I can do that because I'm using M1 Finance. And M1 Finance is, of course, if you haven't used the platform, it allows you to buy partial shares completely free, 0 commission. If you guys would like to try out M1 Finance, I have a whole video playlist you guys can check out on my YouTube site, as well as I will have a affiliate link down in the description below if you guys want to check that out. I'd highly appreciate if you do sign up through the link. And let's go ahead and continue. So I am going to be splitting it up 5 ways here. I have my $115.38 that I add in every week, plus I have cash of $7.29. So that means I'm going to be adding $122.67 into the market this week, divided by 5 positions. I'm going to be adding roughly $24.53 into these 5 positions. So what I'm going to do here is go to my all, sort this by my negative positions, and I'm going to go ahead and just start with Caterpillar here. I'm going to go ahead and buy a little bit of Caterpillar. Again, my buy point was $24.53. And go ahead and continue and confirm. And I'm going to go ahead and go to my next position here. So back out to my portfolio. Okay, we're going to take a look here at 3M. Also do the exact same thing here. I'm going to go ahead and set buy, sell. And I'm going to go ahead and type in 24.53. Continue and confirm. And move to our next position here, which is AbbVie. I'm going to do Altria last because I'm going to add a little bit more into that one. I'm going to just do a little bit extra because they are coming up on ex-dividend. I would like to average into them just a little bit more. And we'll do here and confirm in portfolio. And then we have AbbVie as well. Oh, we've already done. So we're going to do Cardinal Health here as well. Buy a little bit more of Cardinal Health here at 24.53. And continue and confirm. And our very last position here that we are going to be buying is Altria, so select this one as well, and select buy sell, and then of course hit that $24.53. But in this case, I am going to overshoot just in case I do have some extra dividends come into the portfolio. I'm just going to add $5, so I'm going to go $29.53. So what happens is if I have any dividends that get paid out in the account that I'm not really expecting here on Monday, this is going to allow my portfolio to just take the extra dividends and just automatically push it towards Altria as my buy. So here we have all of our estimates done and set up. Altria there up on top, AbbVie, Cardinal Health, Caterpillar, and 3M. Those are all great positions here that I have no problem buying into for the future. You can see here, starting at Cardinal Health. Cardinal Health has 14 years of raising their dividend. It has a dividend increase rate per year of around 37.9%. Who knows if that'll continue into the future, but that's just over the 10-year. Oh wait, well, it's 17.49. So over the past 10 years, their average dividend increase has been roughly about 17.49. This right here, let's just go ahead and copy these so I can go ahead and remember what they were. 37. Okay, so Altria is a split off. It's split off from Philip Morris. Altria itself, by itself, has 10 years of growing their dividend. Their average dividend increase is 15% every time they increase their dividend. AbbVie has been growing and paying out their dividend because they split out from Abbott Laboratories for 46 years. Their average dividend increase is $16.75. Here we have 3M growing and paying their dividend for the past 60 years. Their average yield, or their average dividend increase per year over the last 10 years is 18.24. And we have Caterpillar, which has grown and paid out dividends for the past 9 years. Back 9 years ago, in 2010, they had about a 2-year period where they did not raise their dividend. They didn't cut their dividend, but they didn't raise it. And during the past 10 years, that gave them an average dividend increase per year of roughly 4.52%. Over on the far end, Walgreens, oh, this is not correct information, but that is pretty much it. That is all I wanted to cover in today's video. So those are the 5 stocks that I am going to be buying here on Monday. Drop it in the comment section. What are you buying on Monday? Why are you buying it? Have you already been invested in that specific stock, or are you adding something new to the portfolio? So my 5 stocks were Altria, Cardinal Health, AbbVie, Caterpillar, and 3M. Again, if you guys are not yet subscribed to the channel, hit that subscribe button below. I would really appreciate it. I do cover the stock market, dividends, real estate, personal finance, and beyond. So if you did enjoy this video, hit that thumbs up. And if you have any comments, questions yourself, drop them into that comment section. Again, it's a great time to be buying. It's always a great time to be buying. It's a great time to be starting your investing journey, especially if you have time on your hands. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.